Welcome back to Snowball Investing. In today's video, we're looking at 2 must-buy REITs for 2024. I've handpicked these top-tier REITs with a buy and hold forever philosophy in mind, targeting those of you who want the highest quality REITs to help build long-term passive income. With REITs taking a huge hit in 2023 due to the dramatic rise of interest rates, right now is a great time to look at the discounted REITs before they rise back to normal, with the Feds planning to cut interest rates at least 3 times this year. Both of these REITs have made outstanding acquisitions to position themselves to continue growing their dividend payments for many years to come. I'm also going to compare the 2 REITs to help you decide which is better for you. This is not financial advice. Always do your own research before investing. Let's get into the video. Before we get into the first REIT, let's talk about why having a REIT in your portfolio is a smart move. The purpose of REITs is to provide the average investor the chance to dive into commercial real estate, an opportunity that was once reserved for the wealthy. I find REITs more appealing than direct real estate ownership. Think about it. No stress over dealing with bad tenants or managing properties. You won't get those middle-of-the-night phone calls about busted pipes. Instead, you invest in a REIT that handles all the nitty-gritty, and in return, you receive a portion of their income as dividends. They are legally required to pay out at least 90% of their taxable income to shareholders, which often results in higher and more consistent yields. Plus, REITs offer a type of diversification that other stocks can't match, with portfolios grounded in real estate. If you're aiming to build passive income through investing, including a REIT in your portfolio is a must. Let's dive into our first must-buy REIT for 2024, Realty Income. It's no surprise it tops the list, earning its reputation as the gold standard among REITs. Known as the monthly dividend company, Realty Income has a stellar record of consistently paying and increasing its dividends, paying 643 consecutive monthly dividends and 105 consecutive quarterly increases. This company has over 13,250 commercial properties with long-term triple net leases. Triple net leases are when the tenant pays for the property tax, maintenance, and insurance. This is a huge win for Realty Income as this helps with consistent cash flow. They primarily invest in retail, including big companies such as Walmart, 7-Eleven, and Walgreens, all quality companies that have a great foreseeable future. What truly sets Realty Income apart is its diversification. Their properties span across all 50 states and have recently expanded into Europe, offering a global reach that's rare in the REIT sector. They have historically made great acquisitions for growth and stability, including American Realty Capital Trust and Reit. Their most recent major acquisition was Boston Harbor Resort and AMP Casino for $1.7 billion. This is the company's first venture into the gaming industry. I see a huge upside in that, as the gaming industry is currently generating more revenue than movies and music combined. Just another great example of Realty Income making quality acquisitions for future growth. Looking at the financials, the current stock price sits at $56.50 with a dividend yield of 5.45%. Meaning for every $100 invested you would receive $5.45 in dividends a year. Looking at their dividend history, they have had 26 years of consecutive dividend growth. That is phenomenal dividend growth consistency, presenting a 3.66% 5-year CAGR and a 3.79% 10-year CAGR. Realty Income is down over 13% this year. Almost every REIT took a big hit in 2023 due to the dramatic rise of interest rates. The great thing is the Feds announced they will be cutting rates at least 3 times in 2024. I see this sending the price of REITs right back up or higher. That's why right now I plan on taking advantage of this discounted period we're in. It's hard to beat Realty Income if you're looking for an established REIT providing monthly income that will grow for decades to come. The next REIT on our list has the highest ceiling for growth of the 2 REITs. Vici Properties, emerging as a powerhouse in the gaming and entertainment real estate sector, owns some of the industry's most iconic landmarks, including Caesars Palace and MGM Grand on the Las Vegas Strip. These aren't just any entertainment properties. They're the creme de la creme of entertainment and leisure, attracting millions of visitors each year. With sports betting now legal in 38 states and rapidly expanding, Vici is perfectly positioned to capitalize on this exploding market, especially with events like the Super Bowl happening just miles away from their properties. Another key aspect of Vici's portfolio is the 33 acres of undeveloped land in Las Vegas. Vici also diversifies its portfolio with 4 championship golf courses, 2 of which are near the Las Vegas Strip. adding yet another layer to their entertainment offerings. They own 39 non-gaming properties across the US and Canada, aiding in diversification. Looking at VICI's financials, their stock price is sitting at $30.30, with a starting dividend yield at 5.38%. Since 2018, their dividend per share has grown from 16 cents to over 42 cents quarterly, showcasing a fantastic 5-year CAGR of over 10%. Despite a drop of almost 11% in the past year due to rising interest rates, with the Federal Reserve planning to cut rates at least 3 times this year, this downturn seems temporary. Operating on triple net leases, much like realty income, VICI's tenants cover property tax, maintenance, and insurance, ensuring consistent cash flow and lower operational risks. If you're in the market for a REIT with extremely high growth potential and are willing to invest in a company that might not be as established as realty income, then VICI Properties should be at the top of your list. Comparing the REIT's realty income and VICI Properties, each REIT has its unique strengths, making them appealing to different types of investors. Realty income is known for its stability and consistent dividend growth. The global diversification of their properties and the 26-year track record of consecutive dividend growth might appeal more to conservative investors who value steady performance and less volatility. On the other hand, VICI Properties, with its focus on high-profile gaming and entertainment properties, offers a higher growth potential. VICI's payout ratio is right over 67%, while realty income is almost at 74%, further proving there is more room for growth with VICI. Its strategic positioning in the rapidly expanding sports betting market and owning over 660 acres of land on the Vegas Strip, including iconic landmarks, make it hard to ignore the bright-looking future of this REIT. Investors looking for a REIT with a high growth ceiling, especially those comfortable with the gaming and entertainment sector's dynamics, might find VICI Properties more attractive. On the other hand, if you prioritize stability and a consistent track record, realty income could be your choice. It's ideal for those seeking reliable, long-term dividend income with a conservative approach. Thank you guys so much for watching. Let me know in comments down below, what REIT are you going to be investing in 2024? Don't forget to like and subscribe. See you in the next video.